You're listening to the Finance Magnates Daily Brief, brought to you by Finance Magnates Intelligence.
Today's Monday, the 24th of August, 2026, and these are our main stories. XTB secures Indonesian CFD approval, AI-linked server costs rise, and Japan approves its first new crypto exchange in 4 years. To begin today, XTB has received approval to offer CFDs in Indonesia and expects to launch the product within weeks. The Warsaw-listed broker entered the market in 2024 through the acquisition of a 90% stake in Eagle Capital Futures. Its local operation had initially focused on stocks and ETFs. CEO Omar Arnaut said only minor operational work remains before the CFD launch. The approval gives XTB access to a higher revenue product in a market where it has faced low deposits and limited brand recognition. Indonesia had previously been treated as a market that needed to prove its potential. XTB now says it has no further licensing or geographic expansion plans for the time being and will focus on developing its existing markets. Turning to technology, the cost of keeping trading algorithms online around the clock is rising as AI demand puts pressure on server capacity. Since April, selected virtual private server providers have increased prices by as much as 144%. Hetzner, for example, raised the monthly price of one cloud server plan from €7 and 99 cents to €19 and 49 cents for new or rescaled instances. For traders, the cost can be covered in different ways, through a traditional VPS, a broker-subsidized service, or hosting built directly into a trading platform. Platform clouds can reduce setup work, but they also come with limits on customization and the software that can be used. That leaves a continuing role for traditional VPS services, particularly for strategies that depend on Windows components or external applications. In regulatory news, Germany's BaFin has issued a dedicated risk management rulebook for small and mid-sized investment firms. The new standards take effect on the 1st of January 2027, replacing the previous practice of applying bank-focused rules to these firms. The framework covers risks to customers, markets, and the firms themselves, including technology failures and process outages. It also introduces requirements around capital planning, outsourcing, and, for some firms, orderly wind-down planning. The scope is relevant to investment firms that execute client orders, deal in derivatives, or hold client money. However, firms licensed as banks will remain under separate banking standards. And on the crypto front, Japan has approved its first new crypto exchange operator in 4 years. Laser Digital Japan, the local arm of Nomura's digital asset subsidiary, completed its registration this month. The firm will initially supply liquidity to Japan's existing crypto exchanges before later expanding into institutional trading services. The approval comes under Japan's current Payment Services Act framework, even as the country prepares to move crypto oversight under the Financial Instruments and Exchange Act. The registration process remains demanding, covering areas including capital, custody, asset segregation, anti-money laundering controls, and cybersecurity. That's your Finance Magnates Daily Brief for the 24th of August, 2026. For the full stories, head to financemagnates.com. We'll be back tomorrow. Stay sharp.